Hi everyone, welcome back to Corporate Decoder, where we take boring corporate filings and make them, well, less boring. Today we're diving into a very fresh report from Mobile Global Esports Inc. Prepare yourselves, because this one has some interesting maneuvers. So what's the big news? On August 6th, 2025, Mobile Global Esports, or MGAM, as they're known by their ticker, dropped a report that details a significant financial move. It's a bit like a company taking out a new loan, but with a twist that could really change how its stock looks down the road. Basically, the company brought in $283,000. Now, that might not sound like a huge amount of money, but how they got it and what they're giving in return is where it gets spicy. They issued what are called convertible promissory notes. Think of it like this. They borrowed money, but the person they borrowed from has an option to turn that borrowed money into actual ownership of the company's stock later on. First off, this isn't free money. They have to pay 10% interest on it every year, and they need to either pay it back or convert it by May 30th of next year, 2026. That's a pretty short time frame, meaning they need to figure out what they're doing with this money relatively quickly. Now, for the really interesting part, the conversion. 6 months after they issued these notes, the investor can decide to swap that debt for actual company stock. And here's the kicker, they get to buy that stock at a price that's 65% of what the stock is trading at on any given day. This is often called a discount. So if the stock is trading at on any given day, this is often called a discount. So if the stock is trading at $10, they might be able to buy it for $6.50. This is a big deal because it means the investor is incentivized to convert if the stock price goes up. But what exactly is this market price they're using? It's not just any price, it's the average of the lowest prices the stock traded at over a 15-day period leading up to the conversion. This is a really common feature in these types of deals, and it's designed to protect the investor from converting right before a price drop. It also means the investor is somewhat protected against wild price swings. What if the company wants to get rid of this debt early? Well, they can, but it comes at a premium. If they pay it back within the first 90 days, they have to pay back 120% of the original amount. If they wait between 90 and 185%, so they're essentially paying a penalty to get out of this deal early, this suggests the company might be planning to use this money for something that could improve its financial standing or its stock price, making it worthwhile to pay off the debt. This whole deal, while not a massive amount of money on its own, really signals something about how Mobile Global Esports is operating and maybe its perception in the market. Issuing convertible notes, especially with such a favorable conversion price for the investor, often happens when a company needs capital but might not be able to get a traditional bank loan, or when they want to raise money quickly without immediately diluting existing shareholders too much. Looking at their stock, it's currently trading on the OTC Pink Sheets, which is a market for smaller companies, often less regulated and with lower trading volumes than major exchanges. This means the stock ticker MGAM isn't traded on big exchanges like the NYC or NASDAQ. This can make the stock more volatile and less liquid, meaning it's harder to buy or sell large amounts without affecting the price. This kind of financing the convertible notes often fits the profile of companies in this trading environment. The filing also confirms that Mobile Global Esports identifies as an emerging growth company. This status gives them certain regulatory advantages, like being able to delay adopting new accounting standards. It basically means they're a smaller company navigating the early stages of growth, and they get some breathing room. This is common for companies that are trying to scale up. Now let's put on our Warren Buffett hat. What does this tell us about MGAM? Well, they're actively seeking capital, which is necessary for growth. The convertible note structure with a discount provides a clear incentive for investors to come in. However, the steep penalties for early repayment and the discounted conversion price do put pressure on the company to perform. If the stock price doesn't move significantly, or even drops, the investor might not convert, meaning MGAM will owe the money back with interest, but if the stock price shoots up, the investor will likely convert, buying shares at a discount. This could lead to a significant increase in the number of shares outstanding, which would dilute the ownership stake of existing shareholders. Imagine if you owned 100 shares and suddenly there are 150 shares for every 100 that existed before. Your 100 shares now represent a smaller piece of the pie. The key question is, what is MGAM using this $283,000 for? Is it for operations, marketing, product development, or something else that will drive future revenue and profit? Without more information beyond this single report, it's hard to say for sure, but the structure of the deal suggests they are banking on a future increase in their stock price to make this financing work for them. The risk here is clear. If the company's actual business performance doesn't improve and reflect positively in the stock price, this could become an expensive form of financing, and existing shareholders could see their stakes significantly diluted. On the flip side, if MGAM can execute its strategy and the stock price rises, this financing could be a successful way to fuel that growth without taking on traditional debt that might have stricter covenants. So to sum it up, Mobile Global Esports has secured $283,000 through convertible notes, effectively borrowing money that can be turned into stock at a discount. They have a deadline next year to either repay or convert. This is a common strategy for growth companies, but it comes with the potential for shareholder dilution if the stock price performs well. The company's ability to leverage this capital effectively will be crucial for its future success and for rewarding its existing investors. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into the world of corporate finance. Don't forget to check out our Discord server linked in the description. It's a great place to continue the conversation. Thanks for watching, and we'll see you next time on Corporate Decoder.